Okay.
Thank you.
Thank you.
President, any statement on why you're leaving the G7 early for Washington?
Well, I have to be back. Very important. I want to just thank our great host. He did a fantastic job. Thank you in Canada. But you probably see what I see, and I have to be back as soon as I can. I'm going to have dinner with these wonderful leaders, and then I get on the plane. I have to be back early.
The U.S. president cutting short his time at the G7 summit while posting a message on social media warning Iranians to immediately evacuate Tehran. Investors are cautious again as Trump deflated earlier optimism that the Iran-Israel conflict will not escalate into a broader war. Live from Singapore, this is Insight with me, Haslinda Amin. The spike in oil prices posing a serious risk to Japan's inflation, just as its central bank was hoping lower energy prices will ease consumer prices. We're awaiting the BOJ decision to find out how this is being factored in. As the threat of high inflation rises, we speak to Morgan Stanley Investment Management's Senior Portfolio Manager, Andrew Slimmon, about his market outlook. And with gold shining as investors rush to havens, the London Bullion Market Association CEO Ruth Crowell will be joining us with her view on why Bitcoin was unable to chip away at the metal's popularity, and how can Iran and Israel de-escalate before things spiral into a wider war. We asked Trita Parsi, author and U.S.-Iran relations expert. He's also the executive vice president at Quincy Institute. We have breaking news, some headlines to tell you about out of the G7. People familiar with the matter saying that the G7 nations have agreed to a statement on the Middle East. And linked to the Middle East, we have Axios website saying that the White House is discussing the options of U.S.-Iran meeting this week. Also, that meeting would be between Witkoff of the U.S. and Iran's Abbas Arachi. That's according to Axios website. Again, G7 nations agreeing to a statement on the Middle East. That's according to people familiar with the matter, and that the White House is now discussing the option of U.S.-Iran meeting this week. Now, of course, we have the G7 meeting happening in Canada. President Trump leaving the G7 Leaders Summit in Canada early to attend to many important matters in Washington. His change of plans came hours after he took to social media to call for the evacuation of Iran's capital, Tehran. His warning led to oil prices rising and U.S. futures dropping. Trump also earlier urged Iran's leadership to sign a deal to limit its nuclear program.
I gave Iran 60 days. And they said no, and the 61st you saw what happened. Day 61. So I'm in constant touch. And as I've been saying, I think a deal will be signed, or something will happen, but a deal will be signed. And I think Iran is foolish not to sign one.
Joining us now from the G7 summit is Bloomberg correspondent David Gura. David, the latest line out of the G7 is that there'll be a statement on the Middle East. What else do we know?
So this has cast a huge shadow over the official agenda of this meeting, what this group is going to say about the conflict in the Middle East. And there's been a lot of disagreement over the course of the first day of the summit on that front. There was an agreement among all of the nations except for the United States, centering on a message, a unified message they wanted to send to Israel and Iran, that being to de-escalate. And President Trump earlier today said he didn't want to be part of that. He again talked about the need for there to be diplomacy, for Iran to come to the table. Indeed, he felt like Iran is already at the table by virtue of what's happened over these last few days in terms of the campaign that we've seen waged by Israel on Iran. This is an extraordinary moment, and that Axios reporting, which I should say Bloomberg hasn't confirmed, gets to the heart of this big question that looms over President Trump's early departure from this summit. And that is, what happens next? Is it an indication that the U.S., the Trump administration, which has been reluctant to become more engaged with this conflict, will do that militarily? Or if that doesn't happen, is there another outlet here? And that is something that President Emmanuel Macron brought up tonight, that the U.S. could play the role of something of a peace broker here, at least a temporary peace broker, and get these two warring sides to a temporary ceasefire as they begin to negotiate. We'll see what happens in the hours ahead. But just to reiterate again, President Trump was supposed to have a full day of meetings tomorrow. Narendra Modi of India landed here tonight. There are going to be participants in the meetings tomorrow. President Zelensky of Ukraine is here as well. President Trump will now miss all of that. He'll fly back to Washington tonight. He's scheduled to land in Washington early in the morning, early Tuesday morning, and we'll see what happens next. But it is a dramatic turn of events here at the G7 summit in Canada.
A dramatic turn of events. A lot of questions as well on whether there'll be a statement on Ukraine. Given that Trump is leaving early, it is unlikely, isn't it?
It is unlikely, and as I said, we'll have President Zelensky here on the ground talking with these world leaders. And I should say, going into this summit, there was a lot of caution on the part of the organizer of this event, that being Mark Carney, the Prime Minister of Canada, not to do anything that would upend the apple cart or cause any sort of disruption to the proceedings here. So this is something that he, suffice to say, didn't want to have happen here. But there was a recognition early on that there was not going to be kind of a broad joint communique, the likes of which we've seen at previous G7s and G20s. That wasn't going to happen here. There was a recognition that with the U.S. playing the role that it is today, it's unlikely that they would agree to all of the points, all of the policies that would be discussed by the members of the G7. So what we have instead are these kind of piecemeal agreements. The Middle East one is one of them. Ukraine is another. There's one on artificial intelligence and critical minerals. Countries can sign on to those if they want to, but again, there won't be this kind of overarching statement. And so it's an open question what that statement on Ukraine will look like. But as you indicated, no indication that the U.S. would sign on to that statement, especially since President Trump is leaving tonight.
David, thank you so much for that. Bloomberg correspondent David Gura in Banff, Alberta. Let's get perspective from Andrew Slimmon, Senior Portfolio Manager and Head of Applied Equity Advisors at Morgan Stanley Investment Management. Good to have you with us. I'm just wondering how you're assessing all the risks right now. When you take a look at the pricing in the markets, how much has been priced in already?
Well, my view, Haslinda, is that the economy has been, but companies have pulled their guidance for the year because of tariffs. But analysts are required to still give an outlook, and they've cut their numbers. So Q1 earnings turn out to be very strong, but the full year guidance has been very much negative. So the point of this is that there is an expectation that's embedded in stocks that the economy is going to weaken, earnings are going to weaken, but it hasn't happened yet. And I think that's why the stock market is back to the all-time high, because of the fact that Wall Street is being forced to ratchet up the numbers because of the strength of the economy. Now, this very much reminds me, Haslinda, of COVID, which is companies, pulled their guidance during COVID. Analysts were required to still give a number. They lowered their numbers, and it turned out to be too low. So I think this is the story of why the market has rallied so forcefully. It's tough to get bullish at these levels, but I think that explains why we're back to where we are.
The thing is, Andrew, as you said, markets at all-time highs, S&P at all-time highs. Where do you still find value? Can you still find value, and value is already expensive?
Well, it depends on your time frame. First of all, the comment that, U.S. exceptionalism is over, that's all, anytime anyone says that to me, I always ask, why do you think that? It's all about politics. And I think what's going to happen next year is that the return on all this investment is going to pay off for these hyperscalers. So if your time frame is out a year, I think U.S. large cap tech will do very well. If your time frame is the next 3 months, I'm not so sure, because they're making investments now, but they haven't seen the return. We're about to loosen up the capital requirements of the big banks, and they're trading still at a 25% discount to the S&P. It's crazy, but that's because of great financial crisis. So I think there are opportunities, but again, we've had a very good run, and I could argue the positives and the negatives at this point.
It is interesting that you brought up big tech, because big tech is trading at 29 times projected profit. That's still higher than a 10-year average. I mean, how do you keep buying big tech?
Sure. But that includes, a couple of ridiculously priced, automatic car companies and so forth. Most of them, the valuation has come down. And what I'm saying is they have invested for the first time billions and billions of dollars. And they're telling us, Haslinda, don't worry, we're going to make a return on this investment, but you haven't seen it yet. And this is why the S&P has lagged the rest of the world, because the incremental return on invested capital of these very big companies is lower today than it's been in the past. But I wouldn't bet against them. And I think next year could be the story of where it pays off. And if that's the case, I think these companies will come roaring back and their earnings will reaccelerate. So right now you're seeing a growth slowdown because big investments haven't led to return on it yet. I think it will next year.
I guess another big question is where the dollar goes from here. We saw the gains on Friday on the back of Israel's attack on Iran. I'm just wondering, it's already given up those gains. That story of a weakening dollar persists.
That's a tough one. I mean, I have been in this business for 35 years. I have yet to see anyone who can consistently predict currencies. So I look and say dollar's weak, probably is due for some correction. I wouldn't bet that the dollar goes down meaningfully forever. I think there's some political opinion driving the dollar lower. But at the end of the day, I try to stay very neutral on currencies because I've yet to see, a very good ability to predict, the currencies. And when I talk to people mostly about currency, it comes down to their political opinion. If they're bullish on America or bullish on Donald Trump, they think the dollar is going to strengthen. If they're bearish, they think that the dollar is going to weaken.
As it stands now, though, Andrew, the dollar is weaker. It's expected to go weaker from here, as it stands now, according to the markets. So weaker dollar, higher oil, that must be playing into the Fed's calculations. How do you see the Fed moving from here?
Well, it's very little movement in the Fed. So if that happens, well, then, it won't affect stocks. But if they actually move more aggressively to cut rates, that would substantially improve the stock market. And one of the things that I notice, and I'm not an investor as much in this area, but there is a persistent bid for these very speculative stocks. So the quantum computing stocks, the nuclear stocks, companies that have very little earnings, they continue to do well. Even on days where the market is lower, they continue to do well. So it does lead me to believe that the stock market is again saying, hey, we think there's a chance the Fed will cut more than what is perceptions. But you can't lose sight of the fact that kind of what I would call exuberant growth stocks, which was true in 2021, are coming back. And it scares me, but that's reality.
Andrew, hang tight. Andrew Slimmon, Morgan Stanley Investment Management, is sticking around. Now, coming up, the London Bullion Market Association CEO Ruth Crowell will be joining us with her view on why gold's haven appeal endures despite the crypto fans touting Bitcoin and other crypto assets. And we get a view on how Iran and Israel will de-escalate before the conflict turns into a broader war. Author and U.S.-Iran relations expert Trita Parsi will be joining us ahead. Keep it here with us. This is Bloomberg. Welcome back to Insight. It's decision day at the Bank of Japan, and analysts expect the central bank to keep rates on hold as it reviews its bond purchase reduction plan. Investors will also be on watch for BOJ's commentary on oil prices, with Israel and Iran's clash posing a serious upside risk to Japan's inflation. For more, let's bring in the Asia Trade co-anchor Sherry An, joining us from outside the BOJ headquarters in Tokyo. Nothing yet so far, Sherry, but it is expected to stand pat.
Yeah, the rate is expected to stay steady at 0.5%, as you mentioned. So economists now seeing that potentially January could be the next BOJ move. But what will be important in this decision is, as you said, the review of the tapering process and the quantitative tightening that the Bank of Japan has carried out. Of course, we are talking about bond purchase reductions right now happening at around 400 billion yen per quarter. Could that be reduced and slow down to 200 billion yen, given, of course, the uncertainty that we have seen in JGB debt markets? We're talking about volatility that has sent the 30 and 40-year yield to record highs last month. And of course, the implications for the JGB markets have been big for treasuries as well. And we have seen that impact continue to gain ground, according to Bloomberg analysis. Not to mention that you mentioned the implications about inflation given oil prices. Bloomberg Economics expecting a 0.7 percentage point rise in core inflation here in Japan if, in an extreme case scenario, there was a shutdown of the Strait of Hormuz and oil prices were at $130 a barrel, which of course were far off from that scenario at this point. But what is important is that core inflation has been above the 2% target for the BOJ for the past 3 years. So it's a fine balancing act for Governor Ueda. Will it be really the focus on inflationary pressures or growth concerns? Remember, we didn't get that trade package from President Trump and Prime Minister Ishiba on the sidelines of the G7, implications that are huge for the auto sector that takes about 10% of Japan's GDP.
Sherry An, thank you so much for that. The Asia Trade co-anchor Sherry An outside the BOJ headquarters in Tokyo. As we await the decision from the BOJ, now we're back with Andrew Slimmon from Morgan Stanley Investment Management. Andrew, no change. BOJ set to stand pat.
Yeah, yes, that's correct. But I think you have to take a step back and think about, I've heard for 10 years experts say to me, Japan's cheap and you should buy it. And I said, yeah, but I don't see a change in the profitability metrics. But that's changed. I think ROEs are going up in Japan, and that makes me bullish. But what bothered me is coming into this year, I think it was the most consensus trade that Japan was going to do very well. And then it really pulled back hard in April. So it gets me more optimistic on Japan. I think it is a very attractive market because I think there is a change at the company level in terms of a desire to improve profitability. And that is the key difference. You can buy cheap markets, but until there's a change at the company level, it really doesn't move. And I hear now about Europe kind of the same way I've heard about a decade for Japan. And I don't see the, kind of ROE change in Europe. So I like Japan a lot. I think it's a very attractive opportunity right here.
But where are the opportunities? We know that when you look at the inflows, they're definitely going to the equity market.
Yes, I think, I would focus on the banks. They're they're selling their cross ownership. They're buying back stock. They're focused on improving profitability. Over time, that is one of the best metrics to evaluate companies is change in ROE. And I see that in the Japanese banks.
And when it comes to the JGBs, what are you anticipating? I guess steeper curve, long term?
Well, it would be nice if the yen would weaken a bit because the carry trade would be back on. And I've been wrong about this, but again, what I said is I'm not very good at predicting currencies. Dollar weak, yen strong, seems to me a good opportunity for the dollar to strengthen a bit, just reversion mean and the yen weaken, and that'll help Japan. But look, again, Japan was red hot, the market early in the year, and then has weakened. So I think the setup is quite good here.
Well, the thing is, the yen is likely to get a boost if the BOJ starts hiking rates, and expectations are that it may move in July. Do you see that happening at all?
I can't answer that. I can't answer that. But the flip side is, I don't think the Fed is going to move at all. So I'm not sure that the differentials will change that much in terms of currencies. So I think the dollar could actually strengthen here relative to the JGB, even though maybe the BOJ doesn't change.
Andrew, how are you looking at opportunities in Europe at this point?
Well, look, Europe has done very, very well. And I think the bullish commentary is it's cheap, and Europe is going to have to move inward, look inward to stimulate their economies. And I get that. But again, when I hear that argument, it's usually from strategists. And then when I say, well, what stocks are you buying? It's, I don't do that for a living. So the problem that I have is I don't see the ROE improvement that I see in, say, Japan. And so I think there are some great companies in Europe, but to make a wholesale shift from the US or from Japan to Europe, I'm dubious of, especially since when you're buying Europe, you're making a bet on pharmaceuticals. They're a big portion of the top part of Europe. So I think that's a very, we're in our strategies, we're very underweight healthcare right now, and that implicitly means underweight Europe. So I'm more optimistic on Japan, more optimistic on China,
right,
more optimistic on the US than I am on Europe.
Andrew, before we let you go, just give us a sense of how your portfolio is looking and how that might change in the next 12 months.
Well, look, I mean, at the end of the day, we're coming into the summer. I think Q2 earnings are going to surprise on the upside. It is clear to me that even though the market is up a lot, sentiment is too negative relative to the rally. The sentiment is usually follows the market. And with this magnitude of rally, the sentiment should be much higher. It's not. I believe that's because the politics in Washington is so divisive right now. It's leading people to be more bearish than they should be. And so my belief is the path of the most pain right now is actually higher. It's not lower. And you saw that today. The market rallied.
Andrew?
So, yes.
We have to leave it there, Andrew. Andrew Slimmon, Senior Portfolio Manager and Head of Applied Equity Advisors at Morgan Stanley Investment Management. Just a couple of lines out of the G7 that I want to tell you about. The G7 leaders, including Trump, urging de-escalation on Iran. The G7 statement saying that Israel has the right to defend itself. And that's from the G7 statement coming out of Canada. Still to come, the Quincy Institute will be joining us to talk about the Israel-Iran conflict. Keep it here with us. This is Bloomberg. We have more headlines coming out of the G7 meeting in Canada. G7 leaders reiterating their support for the security of Israel. They're also saying that Iran's principal source of regional instability. The G7 joint statement saying Iran can never have a nuclear weapon, and that the leaders, including Trump, are urging for a de-escalation on Iran. So lots of headlines coming from that G7 leaders meeting in Canada. And President Trump, of course, leaving the G7 summit in Canada Canada a day early, citing the situation in the Middle East. He also put out a post on social media saying Iran should have signed the deal and called for the immediate evacuation of Tehran. Let's get perspective from Trita, Parsi, Executive Vice President at the Quincy Institute and author of The Treacherous Alliance, The Secret Dealings of Israel, Iran, and the United States. Trita, good to have you with us. What are you making of the developments in Canada calling for a de-escalation on Iran right now, but still supporting that Israel has the right to defend itself?
Well, what we're seeing here is the very same impunity that Western states have provided Israel over the course of a very long time, but particularly in the last 2 years. And we know that when there is no pressure put on Israel, there is no de-escalation that will take place, because de-escalation means that both sides or all sides need to de-escalate. There is no such thing as just a unilateral de-escalation. And as long as there is no pressure on Israel from Western powers, particularly the United States, we're not going to see much of a de-escalation. At the same time, I think it's very important to recognize that the statements that are coming out from the G7 right now have also failed to condemn some very fundamental things, such as the bombing of nuclear facilities. These are war crimes. When the Russians did it in Ukraine, there was no hesitation. Western countries rightfully condemned that. They have failed to do so in this case. And that further provides a license for the Israelis to continue to do what they're doing, which has destabilized the entire region.
Trita, where do we go from here? 4 days on, what's the capability of both sides in terms of their fight against each other?
Well, the Israelis are clearly in a superior position in terms of weaponry and capacity. What has been surprising to them, and I think to many, is the Iranians' ability to penetrate their air defenses and inflict significant damage on Israel as well. Now, of course, the Iranians are taking major, major hits. It seems like both sides probably could go on like this for a couple of weeks. Then the internal situation will be uncertain on both sides. Perhaps the Israeli public would turn against the war in some ways or shape or form. Perhaps the Iranian public would turn against the regime, which already is extremely unpopular. It's uncertain. But the longer this goes on, the more difficult it will be to find an off-ramp. In some ways, it's very good that the Trump administration wants to meet with the Iranians and try to see if there's a way to end this. However, if the offer from the American side continues to be that Iran has to completely give up all of its nuclear program, including the civilian aspects of it, then I fear that the Iranians will say no, and then Trump will be in a bind, because on the one hand, then he has to make through on his threats. On the other hand, if he makes through on his threats and attacks Iran, then he will turn a very large part of it, his own base, against him, who voted for him precisely because they did not want to see any more U.S. involvement in Middle East wars.
Trita, just hang tight. We have a couple of headlines from the BOJ. We've been awaiting their decision today. The BOJ will be trimming its bond buying by 200 billion yen per quarter from April 2026. It's reducing its purchase amount of JGBs in a predictable manner. Of course, it's capped its overnight call rate at 0.5%, as pretty much expected by the markets. Again, the BOJ to trim its bond buying by 200 billion yen per quarter from April 2026. We'll get more analysis of that when we cross over to Sharian slightly later. Trita, just to continue our conversation, we talk about how Israel is, in fact, targeting Iran's nuclear capabilities. How much damage do you think Israel can do without the support of the U.S.?
Well, the Israelis are not only targeting nuclear facilities, they're targeting also apartment buildings. They've been targeting town centers in Iran. A hospital has been bombed as well. So it's not limited to the nuclear facilities. They have done damage to the Natanz facility, which is largely above ground. And that was not a surprise to anyone. No one thought that that was particularly well protected. Their ability to damage the Fordo facility, however, is much, much more limited. This is part of the reason why they want and need the United States to enter the war. Only the U.S. has the capacity to do so, at least through air. Whether the Israelis have contemplated sending commandos, etc., remains unknown, but there's been rumors that that would be their actual plan because they cannot bomb it. But even if that were to happen, it is not clear that that actually destroys the nuclear program, because the Iranians already have significant know-how and could reconstitute this. This is part of the reason why even the Israelis admitted that their military option would only set back the program a year or so, after which they would have to go back and bomb it again, which is essentially saying that this is not the end of the story. This is going to be another one of these endless wars.
Isn't it true that the U.S. can end this conflict if it wants to?
Oh, absolutely. This conflict would probably not even have begun, at least this phase of it, had it not been for some form of a yellow or a green light from the United States. The United States can put pressure on the Israelis to stop the bombing. They can put pressure on the Iranians to agree to a new start to the negotiations. But as I said earlier on, if the negotiating position of the United States is complete capitulation from the Iranian side, I fear that that is not going to work. It has never worked before, and it will put Trump put himself in a corner in which he will have to constantly escalate militarily in order to get what he wants. And this is exactly why we are here. When Trump began the negotiations, he had a much more realistic and reasonable negotiating position, which was no weaponization. Then he shifted towards zero enrichment. And it is since then that we have seen a deadlock in the talks and further escalation from all sides.
The U.S. has been pretty cryptic when it comes to whether or not it will get involved in this conflict between Israel and Iran. What would it take for the U.S. to be involved in a more significant way? Would it take for Iran to attack its bases, for instance?
So there's essentially two ways that the United States could end up involved more openly in this conflict. One is if the U.S. is attacked. And that was clear from the outset. This is part of the reason why the Iranians have not attacked the U.S. bases or anything like that, because they don't want to have a direct confrontation with the U.S. The other way is if Trump simply decides that he wants to go in and bomb Iran's nuclear facilities and probably a lot of its conventional sites as well. So in the first case, it's more a reaction and a defensive move. The other case is essentially a war of choice.
Even if there is a deal, isn't it true that a deal would take time? Because when you take a look at the Iran-Iraq war, that deal took 8 years to conclude.
Well, the war took 8 years to conclude, and there were obviously negotiations throughout that entire period, by and large. But a deal that would be technical from its negotiation to its implementation could definitely take some time. But what I think is very crucial to understand, there was essentially a pathway to a very good deal when Trump had his original, more realistic negotiating position. And technically, while there would be some challenges, it could have been finished within those 60 days if Trump had not shifted his position. And we have already experienced seeing that when the Obama administration struck their deal, the technical aspects were resolved. Inspections did take place. They were all very successful. All sides abided by the deal. So there is a precedent for a deal of that kind being successful and very, very effective.
Trita, is there any sense or signal that perhaps China may be assisting Iran? There have been some reports suggesting that a Chinese cargo plane landed with military aid in store. Is Iran getting help from China in any way, or Russia for that matter?
There's not been any confirmation that that is taking place. It is not unlikely or beyond the realm of possibility that it could take place. Now, we have to remember, simultaneously, Western powers are massively helping the Israelis, including shooting down missiles. So there's military engagement, not just sending weapons. So it wouldn't be an escalatory move in that way, mindful of the fact the massive amount of weapons the United States, Germany, and others have been sending Israel over the course of the last year and a half, 2 years. But I don't think we have seen any credible reports of that taking place yet.
Trita, thank you so much for your assessment today. Trita Parsi, Executive Vice President at Quincy Institute and author of The Treacherous Alliance, The Secret Dealings of Israel, Iran, and the United States. Just recapping the BOJ decision, the BOJ keeping its overnight call rate at 0.5%. It will trim its buying by 200 billion yen per quarter from April 2026, and it will make that reduction in a predictable manner. In fact, the BOJ voted 8-1 on that bond plan. For more, let's bring in the Asia Trade co-anchor Sherry An, joining us from outside the BOJ headquarters in Tokyo. Sherry, some key takeaways.
Really, the decision coming out pretty much as expected by economists. More than 60% of economists surveyed by Bloomberg were expecting this reduction, this slowdown when it comes to a bond purchase tapering. We're talking about that 200 billion yen per quarter that you mentioned. Currently, we're at that rate of 400 billion yen per quarter. The BOJ now saying that this is really when it comes to rate rises, if there are more rapid gains in JGB yields, that they could in fact increase those JGB purchases. We're very much wondering if the Bank of Japan would be sensitive to the latest market moves. Still, they're cognizant to the fact that normalization needs to happen. They're saying that reducing these purchases will improve the functioning of the JGB markets. Remember, the BOJ still owns more than half of Japan's debt market. But when it comes to the rate decision, it's as expected, 0.5% holding steady. And that was a unanimous decision, 9-0, as opposed to the bond plan where Naoki Tamura, BOJ board member, actually opposed this slowdown in quantitative tightening. He wanted to keep the pace at that 400 billion yen per quarter. Of course, the implications very big when it comes to JGB yields. These days, very sensitive treasuries to the moves of the debt markets, because it's not only the BOJ pulling back from those debt purchases, but also the fact that we're seeing global fiscal deficit concerns.
Sherry, despite concerns about inflation, no change to its assessment of the economy.
Yes, inflation really accelerating here in Japan. We're talking about core inflation coming in at 3.5% growth in the month of April. We're expecting the core CPI numbers to come out again on Friday. Another acceleration for a third month is expected. And of course, we have the risk coming from oil prices also rising. Japan, a big energy importer, so that will have repercussions for price trends here in Japan. But at the same time, Haslinda, of course, we know that Japan is grappling with a sluggish economy. The first quarter GDP, in fact, contracting, and we still don't have a trade package between Japan and the United States. What that means is that if we don't get an extension of that pause of the across-the-board tariffs on Japan, we could see tariffs go up to 24% from the current 10%.
Sherry, thank you so much for that. The Asia Trade co-anchor Sherry An outside the BOJ headquarters in Tokyo. Still to come, we unpack the outlook for gold with the London Bullion Market Association as market uncertainty pushes investors towards safe haven assets. Keep it here with us. This is Bloomberg. Welcome back. Markets are risk-off as investors weigh potential escalation of the conflict between Israel and Iran. The haven plays are also in focus as even treasuries catch a bid and gold flirts with a record high. Yet, even then, there are signs that volatility indices are looking complacent. April Hong, we've been here before. There's so much complacency in the market.
Yeah, I mean, we've seen this movie play out, right? And it seems like increasingly investors getting accustomed to reacting to geopolitical news, and then the markets ease off once this de-escalation rhetoric starts creeping back in. That's one of the points that MLive's Garfield Reynolds has been making. Are markets underestimating the potential for fresh turmoil given a more volatile world that we live in? Not just about Israel, Iran. Think about the US and China, Ukraine and Russia, India, Pakistan. And if you look at this gauge of treasuries implied volatility, not only is it the lower level than when we saw it in April, it's also lower than the 30-day moving average. Even if you're looking at other traditional haven plays such as gold, yes, it is the board flirting with that fresh record, and we are seeing that these gold shares, ETFs, 1 month call skew, it's around the highest that we've seen it since mid-April. But you also get the sense that despite these bullish signals, that it's playing out to a smaller extent than during the tariff turmoil. Now, flip the board, a bit more context for you when it comes to that conversation on gold. We are seeing it supported by central bank buying. It has, of course, risen about 30% so far this year. And indeed, if you look at central bank reserves, it's actually eclipsed the euro as the second largest asset based on the annual assessment from the ECB. And of course, this year, a number of other drivers that we have to mention. It's also about the weakness in the dollar and also the concerns about the global growth trajectory amid Trump's economic agenda. The bigger question here, Has, is still whether investors have properly accounted for markets that could quickly change course.
And where gold goes from here, how high does it go? Avril Hong, thank you. Well, gold is suddenly the big talking point at the Asia Pac Precious Metals Conference, which is taking place here in the Lion City. Let's get more insights from Ruth Crowell, CEO of the London Bullion Market Association. Ruth, good to have you with us. So what's the fundamental case for gold as you go for gold in 2025?
Well, I think gold has always been that safe haven for investors. And I think we in the gold industry have always known the important role it plays during times of uncertainty. And certainly that is something we see happening around the world. Uncertainty in terms of geopolitics, uncertainty in terms of macroeconomic. And I think this point about central banks is very important. So we've got record highs on the price, but I actually think it's a new era for gold because you see central banks turning to it, and that has been going on for a few years. But you also see the ECB and others talking about it, reporting on it in a way that we haven't seen. And in terms of tonnage, if you look at the central bank holdings around the world, we're actually starting to approach a Bretton Woods level when it comes to tonnage held by central banks.
Who's leading the pack? Is China the key buyer of gold?
I think that there's quite a few there. I think it's not the ones who still have the most because they tend to not be as active in the market. But I think we certainly have seen some central banks coming to the fold. And what has been interesting from my side of things, it's central banks who are key producer nations, so China is one of those, seeing the benefits of their producing this metal within their domestic economy and seeing the value of bringing it into the central bank portfolio. I think it's not just what we would call the emerging economies, but also in places like Ghana. This is the 6th biggest producer of gold annually, but they haven't added to their own portfolio reserves for decades. And that's something very publicly they're looking to change.
You talked about how gold is a haven play against a backdrop of rising risks, for example, in the Middle East. And just wondering whether it's also a case of diversification for a lot of these central banks pulling away from U.S. assets and putting it somewhere else.
And so gold is that neutral currency. I think the other thing that sometimes people forget is that it's also nobody's liability. You're not basing the value of your assets on the strength of the economy and the strength of the national currency. It's as long as you have central bank grade, which is London good delivery, you can rest assured in terms of the safety of that asset. So certainly there's a move in terms of diversification, moving to more of a neutral approach. And also if you're a nation that has natural production, taking advantage of that domestic production.
How much of unreported gold buying is there? Because I recall back in 2015, China came out to say, you know what, we have 600, tons more gold, which was not reported the last 6 years. Might that be happening now as well?
I think there's always going to be things that are outside of the statistics we have. If you look at LBMA trade data, which we've been publishing on a daily basis for 6 years, we oblige our members to report, but we know that that's just rings within the onion. That's what we can oblige and ensure that we have the transparency, but the pie itself is actually a lot bigger than that. So I think we're certainly encouraging transparency. And when you have these high prices, investors around the world are flocking to gold, and we want them to look at the data we have out there and to be confident that they can invest safely.
How are you encouraging transparency?
So from our...
And what's the traction? How's the traction been?
It's been good. You know, I think we've spent a lot of times talking to central banks because of this interest. And there tends to be a lot of staying power in terms of central banks, who maybe the last time they touched it is actually when they sold a lot of it in the 80s. There's been a huge amount of news in terms of transparency and governance in the gold market. We celebrate 10 years since the price was transferred to independent administration. We celebrate 6 years in terms of daily statistics. So we do know that the volume just from January to now in the local London market is up 23%. And you just didn't have that. You didn't have the stock information. I'll tell you a little bit about the importance of transparency if we go back to talking about tariff fears. Certainly that was a big focus for the gold market in Q1. Lots of rumors about, is London running out of gold? Now we've been putting out vault holdings since 2017, and I think my marketing team advised me this isn't really exciting data. It has been very exciting data, because when that data came out and it demonstrated transparently there were strong stocks in London. Most of that was sitting with the Bank of England and slowly moving to the commercial sector. And you saw that story go month after month in terms of demonstrating. Investors around the world felt confident that they understood what the dynamics were. So it's putting it out there, one, to allow markets to operate, but also to allow new investors who are learning for the first time, perhaps, the value gold can play during periods of uncertainty. They can invest with confidence.
As we talk about surging demand for gold, we have to talk about sustainability of gold mining. How are you encouraging that? What are we seeing?
So we focus more on responsible sourcing, and I would say as the price rises, so does the importance of our work. So we, on the financial market side of things, we're obviously making statistics in terms of trade data, vault holdings transparent. We've also just announced in the last few weeks that we're fast-tracking transparency when it comes to our refiners. So we also run accreditation for the London Good Delivery List. If you're a refiner producing bars, it's a must-have if you want to be able to trade on the world's largest market, which is local London. So it's not a nice-to-have, it's a must-have. It's an access to that local London market. And we've said from next year, you're going to need to publish which mines you're sourcing from in terms of country, mining company, and location. And this was planned, but it's something we've brought forward because we want to give people confidence and demonstrate our commitment to these principles.
Ruth, before we let you go, final question is where you see gold headed from here? Where do you see gold trading by the end of the year?
Well,
especially bearing in mind, I mean, there is a gold alternative. We talk about lab diamonds. Now there is the lab gold as well.
Well, I think it's been a great one to be at the conference here in Singapore because, of course, price is certainly on the agenda. And the strong view from the audience was looking at $4,000 gold by the end of the year. I think we didn't have any takers for looking at 5,000, but I mean, to me, as someone who's been in the industry a long time, we broke through 2,000 in COVID, if you remember, is this big ceiling. That is the sub-basement these days.
Ruth, thank you so much for that. Ruth Crowell, CEO of the London Bullion Market Association. We have a line from the U.S. Embassy in Jerusalem. It will be closed on June 17th. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.